Hello! Today we're going to discuss financial principles found in Judaism. I'm going to draw from several books. One of them is Judaism, Law, and the Free Market, an Analysis by Dr. Joseph Isaac Lifshitz. One is With All Your Possessions, Jewish Ethics and Economic Life by Meir Tamari. And another is The Five Books of Moses. All right, let's get started. First of all, Dr. Lifshitz says, man is encouraged to be a strong, creative, and responsible person, one who builds his wealth so that he may take responsibility both for himself and for those around him. Furthermore, charity is given according to a moral duty as opposed to a civil legal duty. To expand upon this, Dr. Lifshitz says, the most important example was the custom of giving a tenth of one's earnings to the poor that was derived from the commandment to give a tenth of one's agricultural yield to the poor in the 3rd and 6th years of every 7-year agricultural cycle. In this way, the sages set a minimum for charitable giving, but also permitted those who could to give more, up to a fifth of their income, a philanthropic system that continues until our own day. So, people might have given a tenth of their earnings to the poor, but not more than a fifth of their earnings, because the point is that you didn't want to become dependent on someone else. You still want to be working, earning money, providing for your family, earning money honestly. So it's very similar to the Islamic concept of earning wealth. It is interesting to note that Jews give the most in charity out of the Abrahamic faiths, even more than Muslims, and also the most to non-Jewish organizations than any of the other Abrahamic faiths give to faiths outside of their own. Dr. Lifshitz explains, wealth that is gained through hard work and honest means is, in Judaism, a positive expression of man's efforts as a godly being. Similar to Christianity and Islam, the concept of stewardship is emphasized in Judaism. According to Dr. Joseph Isaac Lifshitz, in the Jewish concept of stewardship, man is called on to take care of his world because it is given to him as a responsible being. Dr. Lifshitz says that, indeed, the Jewish tradition makes clear that man's authority over all other creatures is unequivocal. Yet at the same time, he is enjoined to act responsibly in the material realm. Let's discuss usury in Judaism. Dr. Lifshitz says, lending money to the needy is a moral obligation not so different in character from providing charity. It is an obligation that should be performed from altruistic motives free of self-interest. Even reasonable rates of interest are forbidden. And it is not permitted to take pledges when the lender is slow returning the loan. Both the Talmud and the Hebrew Bible are strictly opposed and highly critical of all forms of usury and forbid the charging of interest. As a matter of fact, Jewish law was unique in antiquity in this regard. Other cultures and legal systems drew a distinction between interest and usury. It is clear that the Torah prohibits usury between Jews. However, in Judaism, the oral Torah carries the same or more weight than the written Torah, as Judaism is an interpretive tradition. Therefore, in order to analyze these few passages about usury in the Torah, one would have to examine the Mishnah and other sources. According to Meir Tamari, it is not permissible to receive assets for the purpose of operating with them. For example, sheep given to a shepherd under condition that the owner and shepherd share in the wool, lambs, and milk with responsibility, where the full responsibility in case of theft or death of the flock falls on the receiver from a Jew, since this is interest. It is rabbinic interest, according to Maimonides, since the owner has no share in the risk. Other authorities, like Tosafot, see this as ribit midiareta. I don't know if I'm saying that right. Ribit midiareta, as the profit accrues to the shepherd, who pays a fixed sum annually to the owner for the use of his capital. It is permissible, however, to accept such assets from a gentile. It is permitted to borrow from gentiles and to lend to them interest-bearing loans. This ruling also applies to a Gerdasha, a Gentile who lives in the land of Israel and accepts the 7 Noahide laws. Tamari says that the halakha distinguishes between that interest forbidden directly by the Torah, ribit midiareta, and that which is forbidden according to rabbinic law, ribit midirabanan. Although both of them are forbidden to Jews, the religious implications of the former are more stringent. The Torah is understood to directly forbid loans in which the recipient is liable to pay a known sum for the use of money. For example, Reuben lent Shimon $1,000 for a year on the condition that Shimon return $1,100 at the end of the year. This is known as a portioned interest or ribit ketsutsa. In terms of rabbinic interest, the easiest example to cite is the hire purchase installment plan system. In this case, Reuben does not formally loan Shimon the $1,000. Rather, he sells him goods that are valued at the time of the sale at $1,000 and gives him 60 days credit. In exchange for this credit, Shimon will pay Reuben an additional agreed-upon fee over and above the purchase price. Formally, this is no loan, and so there is no interest. In actual fact, however, Reuben is receiving a payment in exchange for waiting for his money, which is in the economic sense considered interest. Halakhically, too, this is considered interest. Yet it is distinct from that defined by the Torah and so is considered rabbinic interest. The levying of rabbinic interest is forbidden. That's the end of my short presentation. This is just a brief introduction to Jewish finance. I want to, at this last slide, I want to thank Rabbi Joshua Ladon, who taught me Judaism at the Graduate Theological Union, and also to Dr. Joseph Isaac Lifshitz, who I've quoted a lot in this presentation, for guiding me to his book, Judaism, Law, and the Free Market and Analysis, which I recommend if you're interested in learning more about Jewish finance. All right, that's it. Goodbye.